This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Oil gaining with the Middle East ceasefire close to collapse with new U.S. strikes on multiple targets in Iran. President Trump accusing Tehran of dragging out talks. Asian stocks set for losses with a renewed tech sell-off driving the S&P 500 to a 5-week low. Oracle falling in late trade on worries about AI spending. And order books closing on the SpaceX IPO with demand said to be more than 4 times the available shares as the company touts investment-grade credit ratings.
And I'm Haidi Stroud-Watts in Sydney. Take a look at the setup for trading across Asia. As Shery alluded to, this is all about the revival of the conflict in the Middle East as we see the U.S. Resuming these further strikes. American forces starting new strikes in Iran, putting just further strain on an already fragile ceasefire that's dragged on for weeks and months, threatening to prolong the conflict in the region. We saw the U.S. military launching these strikes against multiple targets in Iran for a second day in a row. President Trump accusing Iran of dragging out the interim peace deal talks. We have also just heard from Iran, Press TV reporting that Iran's Khatam al-Anbiya central headquarters saying that the Strait of Hormuz has been completely closed to all types of vessels, including commercial ships. So this stalemate continues and it in fact appears to be worsening when it comes to this conflict between the two sides. We are seeing that jump in oil prices. Brent crude there 1.8% is what we're seeing in the last trade, but New York traded crude seeing that reaction, that big surge in New York traded WTI up by 3.6%. This disruption to Middle East flows really continuing to push energy prices high, including, of course, gasoline in the US. We've also seen US inflation accelerating to that 3-year high with that erosion of spending power and paychecks. Unsurprisingly, we are seeing downside expected across the region. As you saw, Sydney futures looking like we'll see a negative start at the open. S&P at the moment in that last trade 1.6% lower, and we're indicating lower when it comes to both Korea and Japan when we get to the start of trading there. Dollar yen still pretty comfortably above that 160 level with some uncertainty as to what to expect from the Bank of Japan, with Governor Ueda hospitalized and expected to miss that June policy meeting now. Let's get to the latest in Washington. We'll bring our Bloomberg Politics editor Laura Davison. So Laura, after what seemed to be quite a bit of patience over the past few days and weeks from President Trump, what has changed? Because it feels like very much the tone has changed, particularly with this second day of strikes.
Yes, the term ceasefire really has ceased to have any meaning here. We've seen sort of a volley of strikes back and forth between Iran and the U.S. With just, about an hour ago or so, the U.S. announcing a new round of strikes on Iran. We've seen, President Trump really get more angry and angry, that Iran isn't coming to the table to strike a deal, or at least the deal that Trump wants to see happen. So this is, we're essentially sort of seeing Trump in real time react to his patience running out. He wants to see some sort of progress. The midterms are getting closer. Gas prices continue to be high and elevated as we're headed into these summer months. And there's just, really no progress has been made, despite Trump saying several times, including as recently as over the weekend, that a deal could come together in the coming days. We just have not seen that happen. And Iran has continued to deny that there is a deal at hand that they could agree to, to sign on to in the next couple days.
And of course, the question is around the Strait of Hormuz, right? Iran now saying that the strait is completely closed to all types of vessels, according to local media there. And we're now hearing from the Islamic Revolutionary Guard Corps Navy that 2 vessels attempting passage through the strait were actually struck. What's the situation there at a time when President Trump is now saying that the U.S. actually controls the waterway?
Yes, this is a sort of a key point of differentiation where, both sets of facts can't be true. If Trump is saying that hundreds of vessels have moved through with the help of U.S. military escorts, where, Iran is saying that essentially that traffic has ceased to exist. This is, kind of part of where we're seeing some of this military flare up. This is at the core of that you see, Iran saying that the U.S. is violating airspace. You see Iran saying that the U.S. is violating some of this water space, and that, we're continuing to see the military sort to target ships and helicopters that are moving through those various passageways near and around the Strait of Hormuz. We have seen at least some oil come out of the Strait of Hormuz, and according to some data and reporting from Bloomberg. But this is remains to be a key point of tension. And really, Trump, all he wants at this point is to get the Strait of Hormuz open. Some sort of broader deal. He suggested he'd be willing to wait to Iran agreeing to a nuclear weapon, not pursuing that. Could be at a later date. But right now, everything is completely in flux, as it looks like, the military campaign is ramping up, including, Trump having a meeting at the White House earlier today where he was talking with advisors about potentially having some sort of, even bigger military campaign, short-lived, but very strong.
Bloomberg political editor Laura Davison there joining us from D.C. on the latest on Iran. And following the latest attacks on Iran, we're now seeing U.S. oil prices jumping. Let's bring in Bloomberg Markets reporter Anthony Stevens. Anthony, of course, we actually got the inflation numbers overnight from Wall Street. And what was interesting was that about half of the headline inflation number came from energy alone, although core CPI still was soft. So what's weighing on the markets right now?
We have to dig into the details a little bit, right? We are setting up for quite a debate here between the Fed and real people. The core CPI was dragged down by people cutting back on items such as new autos or home furnishings. These are kind of, a good life, what I would call good life indicators. And people are cutting back on that stuff, and that's what reduced core CPI. On the other hand, as you mentioned, CPI as a headline level is above 4%. It's at 4.2, the highest since 2023, and double the Fed's target rate, right? So the Fed can look at core CPI if they want and say, look, we don't need to raise rates. It's under control. But for the average person who is now facing a very sharp fall in savings rate, consumer confidence, and also in their real wages dropped for a second month in a row. So this is really setting up a debate in the U.S. economy on what inflation we need to look at, which may sound technical, but with the Iran war continuing and the energy input into inflation continuing to be very high, this is a technical debate that has significant political and economic repercussions for the U.S.
Where are we going to see the pain points in the Asia session today?
Right, so the Asian tech session is challenged by a U.S. tech session that struggled with the confluence of this inflation and liquidity factors. So the company Supermicro decided to try to raise money ahead of SpaceX and after Google and got slammed for that. It was down 28%. That is one of the liquidity drivers alongside the SpaceX IPO that weighed on tech overnight. There is no liquidity support ahead of the SpaceX IPO while inflation remains high. Lastly, for our region, TSMC came up with some very solid sales numbers, up 30%, but was down 5% as that kind of came in a shadow below what the market was expecting. This just shows you the high expectations that are baked into tech stocks across the region. The margin for error is really low with this inflation backdrop, with the Iran war continuing. The margin for error for tech investors is also very low. People are going to stick to their high conviction names and look to trim more of the speculative excess, as we have seen this entire week.
What a week it's been. Our markets reporter Anthony Stevens there setting up the session for us. And still to come on the Asia trade, the Bank of Japan Governor Kazuo Ueda set to miss next week's policy meeting after being taken to hospital. Details are coming up next. This is Bloomberg. Let's get some more details on that US inflation print accelerating in May to the fastest pace in more than 3 years as the Iran war pushed up energy prices, outstripping Americans' pay gains. For more, let's bring our Federal Reserve and economy reporter Enda Curran. And we were just talking a few minutes ago about the nuances of this print, right? Because if you take a look at core, it doesn't look quite so bad. But take us through what you think the concerning elements are and what the takeaway is going to be for the Fed and perhaps for the political situation too, with the ongoing pressure on energy prices.
Yeah, well, look, I think the headline is headline inflation back over 4%, Heidi. Fastest increase, as you mentioned there, in 3 years. More than half of that is down to oil on the back of the Iran war. Now, obviously, within that, there is nuance, like you mentioned. We saw prices come off for some staples like new cars. Interestingly enough, medical insurance came off. Beef prices came off. These have been all the kind of usual suspects over the past few months. Services prices somewhat subdued. And of course, core inflation on month coming at 0.2, which is a touch below expectations. But on year, core is at 2.9. That's certainly well out of bounds for the Fed's target. So, these numbers do not scream that the Fed have to walk into their meeting next week and raise interest rates, either this month or in the near term. But it is a reminder that inflation is resurgent in the US again. And a lot of it has got to do still with the energy story. And a lot of that's hanging on Iran. And we saw the news on Iran today.
Where does this leave Kevin Warsh? Because he obviously, went into the Fed with a very clear mandate on what certainly President Trump thinks that he should do.
Yeah, so the numbers are not good for the Kevin Warsh narrative. Mr. Warsh, in the lead up to getting that nomination to become the Fed chairman, was pushing a narrative around there is a roadmap or a path to lower interest rates. One of those subplots was the idea that the AI boom will be disinflationary. Now, that, of course, may well yet prove to be the case. But actually, AI is also driving up costs right now for key technology components. And on a year-on-year basis, actually, that hit a record increase today of almost 15%. So the narrative that he was mapping out back around January time isn't playing out. But neither does that mean he has to front up to an interest rate hike next week, Heidi. I mean, there's still a lot of debate among Fed policymakers. They've pulled clear of their easing bias. They're on hold, but that does not mean they're going to be raising rates anytime soon. And maybe that's going to be the bigger challenge for Mr. Warsh now in the near term. It's no longer about him trying to push through the rate cuts that people kind of had expected he would advocate for. Maybe his challenge and win now might be holding off the hawks in terms of drumming up support for a rate hike in the near term.
Federal Reserve and economy reporter Enda Curran there. A little bit of a different story to the Fed here in Japan when it comes to next week's BOJ policy decision. The expectation is for a rate hike, but still Bank of America saying that if the BOJ delivers a dovish hike, the yen selling could accelerate. It's now fallen back below that 160 per dollar level. It's put intervention risk firmly back on the table. But traders continue to bet against the currency despite Tokyo's attempts to stop them. For more, let's bring in our chief Asia FX and rates correspondent, Ruth Carson. And Ruth, it's really about the global rate backdrop as well for the BOJ, right? We're talking to Enda right now. And of course, we have seen the very strong inflation numbers out of the U.S. overnight.
Yeah, absolutely. There are so many factors working against the yen right now. It doesn't help in a way as well that traders are already expecting the BOJ to hike. So anything less than a firm hike and probably hawkish commentary from the BOJ would mean even more selling pressure on the yen. We've seen the headlines in the last 24 hours, more conflict on the Iran front. We've seen oil also going up more than 2% in Asia this morning on the back of those headlines. So all of this leads to higher inflation risks. Higher inflation risks leads to higher yield risks around the world, and all of this will weigh on the rate differentials between Japan, the US, and the world, and it means more pressure on the yen. Sell yen.
More pressure on JGBs as well, especially after that 30-year auction didn't go that well.
Absolutely. Weak auction. If we look at a bid to cover ratio for the 30-year debt yesterday, the average for the last 12 months is around 3.4. It's come under 3. Now, yields have actually dropped in recent sessions. So you kind of go, okay, those dip buyers, those people looking to lock in those juicy high yields, well, they've sort of, fluttered to the edges. As a result, we did get a weaker auction. And again, remember, inflows do matter. Bids on bonds do matter when it comes to supporting the currency, in this case, the yen. So definitely on that front as well, it's bearish for the yen because people aren't buying as much JGBs.
Yeah, who else is losing when it comes to currencies around the world, given the rise of the U.S. exceptionalism narrative again? Yeah,
it's deja vu, isn't it? In a way, we're looking at a conversation that we're having at the start of the year. The dollar is king for a reason. Undisputedly, the world's reserve currency. Virtually every single currency in the world right now is under pressure. The major currencies against the dollar, especially on the back of the latest tensions. Look at the Aussie, a risk-on currency below 70 US cents at the moment. And if you look at sterling, for example, in the European session, it's under the 135 handle. Basically, people are going, what do I do in this environment? Look, US rates are really high. They're one of the biggest exporters when it comes to oil in the world as well. So just block the king dollar when everything else looks uncertain.
Mm-hmm. Chief FX Rates Asia correspondent Ruth Carson, you're so right. It seems like we're revisiting a conversation we just had a few months ago. We do have more ahead on the Asia trade. This is Bloomberg.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Bloomberg has been told the SpaceX IPO has attracted demand for more than 4 times the available shares. Banks were expected to stop taking orders after the U.S. market closed as investors worldwide brace for the biggest public debut ever. Let's get the latest with our deals editor, Michael Haida, and Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. Michael, let me start with you. I mean, this is huge, perhaps the biggest market story of the week. Give us the latest on where we're headed with this IPO, which is already heavily oversubscribed.
Right. And of course, it's the biggest IPO ever, $75 billion. So we got a lot of superlatives here. The process is pretty clear right now at this point. There's not a whole lot of drama like there is in a lot of other IPOs because of that set price. The shares are being sold for $135 a piece. It will raise $75 billion with the shares being sold, and the orders are in, the books are closed. The only drama might be tomorrow that the allocations will be made to the institutional investors who account for 70% of the IPO, and they'll find out what shares they get, how big of a allotment. Of course, there's the never say never. This is SpaceX and Elon Musk, and things might be surprising at some point, and perhaps an upsize that seems unlikely, or a change in the share price also unlikely. But between now and the start of trading of the shares on Friday, it looks like pretty clear sailing.
Mandeep, it's a pretty basic question, but what are investors actually putting their money into?
Well, I mean, it is a conglomerate. When you look at, SpaceX, it's got 2 businesses that are somewhat related, the space launch and the Starlink business. And then you have the AI business, where I feel like the Starlink business would be subsidizing the AI business. And that's where, the recent compute deals that they have signed with Anthropic and Google could add up to $25 billion in revenue over the next 12 months. So the fact that they are able to rent that compute and generate revenue is great for the near term and kind of improving the sentiment around growth prospects, because this wasn't a fast-growing company if you look at the growth rates. But suddenly, once you layer on that $25 billion in revenue from the compute deals, it becomes, a growth company, and that's what I think would be exciting for investors to look at.
Michael, exciting, but also definitely polarizing, right? Jim Chanos saying that the valuation is being fueled by, quote, hopes and dreams, but certainly enthusiasm for Elon Musk and the AI trade broadly, as opposed to perhaps any sort of, specificity about the business right now.
Right. I think Elon Musk has his detractors and fans in equal measure, it seems. The China story is out is very interesting. Yes, the company is getting a very high multiple. But a lot of things are special with the company. It is, as noted, it has this existing rocket launch business. Starlink is up and running. These are certainly strong plans and have growth potential. The AI component is coming on. Obviously, going to Mars is a bit out there still, but there are investors who are willing to put a lot of money into it. Starting with the institutional investors. We reported today that Saudi Arabia's Public Investment Fund and the Kuwaiti Investment Authority are each putting in $1 to $5 billion, seeking those allotments. There's enthusiasm in Europe and Japan. One of the things that's crept up is that some of the banks that are assigned to do all the retail investor marketing are doing a lot of work because they're, 30% of those shares is a lot of shares to market. And those banks, including Mizuho and SocGen, aren't getting compensated perhaps as much as they would like. And also they don't get the bragging rights because they've been relegated to this lower status of co-managers, while the top line banks will get the larger fees.
Mandeep, despite the exuberance around the IPO and, of course, the growth potential here, SpaceX is still a company that's losing billions of dollars, and yet it's going around telling investors that it's lined up investment-grade ratings. What's the reason right now that we're seeing so much confidence in this company, and how does that compare to the rest of the tech sector, AI sector, space sector, or whatever you can actually compare it to?
Actually, when you think about the space sector, the dominant company there is SpaceX. So, that's where, when you look at the addressable market, it is large. And you could say, the telecom companies trade at a much lower valuation. But the potential that SpaceX has is huge. And to your point, look, you need to have a leap of faith in terms of their ability to expand, add more satellites and be able to translate that into revenue the way they have done it with Starlink, and then hope the Cursor acquisition would really revive the AI side of things. So there is a lot of future growth that you can see down the horizon. But at the same time, there's always a conglomerate discount with, entities like this. And that's where it will be interesting to see how far investors are willing to, just believe in the company in terms of the cash flows are way further out. And if investors are patient, then they could be rewarded. But you need to wait out a few years before you start to see the cash flow with a company like SpaceX.
So much, Michael, about this is unusual, right? This is a growth company that doesn't pay dividend. There's an argument that essentially what you're investing in and betting in is just continued price appreciation. Do you think this is the model that's been set going forward for some of the other big AI IPOs that we're still waiting for?
That's a very good question. For OpenAI and Anthropic, they are coming up perhaps this year. And they have a simpler bet in a way, too, though. They really are obviously, they're AI. They don't have a rocket launch system involved or plans to go to other places in the solar system. At the same time, there is so much liquidity that's going to be drawn in the market, and that's going to be an issue.
Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, our deals editor, Michael He, are there with us on SpaceX. More ahead here on the Asia Trade. This is Bloomberg.
Heidi, we continue to watch the latest developments around the ongoing war in Iran. We're now hearing from President Trump speaking to Fox News, saying that he actually spoke directly to Iranian officials that, according to him, wanted the U.S. to stop bombing them. Of course, we have heard from the U.S. Central Command saying that they are now continuing to implement additional self-defense strikes. Remember, this would be a second day in a row that we're seeing these strikes coming from the United States after the downing of that U.S. military helicopter. We had heard from the Iranian side as well that the Strait of Hormuz, at least, remains closed to all types of vessels, and the Navy there had said that they struck 2 vessels in the strait. So really no progress when it comes to any sort of resolution. And this ceasefire that at least remains in name, but has it collapsed at this point, is a question as well.
That's a good way of putting it, Shery. It remains in name, right? We've been calling it a stalemate. It's been dragging on for days and weeks. And it's interesting, until this point, until the helicopter incident, of course, we've seen the president sort of taking almost a fairly patient approach, saying that it will be done soon, oil prices will go down. But we haven't seen much of the substantive progress being made, and it seems like that situation is worsening. But it is interesting, we're hearing from the president on Fox News saying that the Iran bombing will stop shortly, that officials from Iran have asked him to stop bombing. In the meantime, though, no vessels, according to Iran, passing through the Strait of Hormuz. We are seeing that reaction holding in that oil price, up by 3% in New York traded crude. We're seeing that return of sort of dollar and US asset supremacy as well. That inflation print that came through a little bit hotter than expected, also weighing in there, and US futures to the downside, as is the rest of Asia as we head into the start of trading in the next half an hour. Let's get more on the geopolitical situation, the re-escalation of the Iran war, with Lanhee Chen. He's a fellow at Stanford University's Hoover Institution and a partner at the Brunswick Group, a global business advisory firm, and of course someone we chat to quite often. It's such a pleasure to have you here in person in Sydney. What do you make of this situation? I'm particularly interested in what must be going through the president's mind right now, given that it has been a prolonged period where not a lot has happened, and all of a sudden things have heated up again.
Yeah, we've been told for several weeks that a deal was very close, that a deal to end the conflict was very close. And then the president got quite a bit of pushback on what that deal might look like, particularly from domestic constituencies who would have accused him of essentially doing the same deal that President Obama did, which of course President Trump has railed against. So I think that process of trying to work out a better deal, that's essentially what's occupied the last several weeks. The challenge, of course, is that the Iranians don't seem to be giving on the things the president wants them to be giving on. And so you have this tension. The president, on the one hand, wants to end the hostility because he needs to address questions around high energy prices in the U.S., as well as, frankly, in this region, where I think the war has taken a really significant toll on the price of energy and the availability of energy. Put that against what needs to be a good end of the war, one where both the Americans and the Israelis can claim some form of victory. I think those two tensions are really what's animating some of the challenges behind actually ending this thing.
You've talked about the pushback against the war. The president's facing pushback on a lot of fronts, right? It looks like it's going to be a summer of discontent in Congress with his Pentagon spending request. He's getting pushback on immigration. We're seeing refunds now being processed for his tariff wall efforts. How much pressure is President Trump under? Because at the same time, he's also said he doesn't care about midterms. I mean, in some respects, he is a lame duck president for the rest of this term.
There is political pressure that comes from Republicans, from his partisans in Congress, who will see the impact of the Iran war in terms of the outcome of the midterm elections. I think the president also is saying, sort of speaking truthfully when he says he doesn't necessarily care, because for he himself, the politics of this are somewhat removed from the politics of Republicans in Congress. Of course, he'd love a Republican majority in Congress. Of course, he would love to not have to deal with Democrats investigating him all day long. But I think he's come to accept the reality that he's going to have to go it alone on a lot of these things. So the pressure he's feeling, there certainly is political pressure, but it may not be as acute as many people on the outside would think, because the reality is the president has always been a go-it-alone president. He's done executive action since day one. I would expect that to continue.
And we're sort of halfway through the primary season as well, Lanhee. What's been your take so far of how President Trump is viewed at the moment?
Well, with the Republican Party, the president continues to be the dominating force. If you look at his ability to knock off incumbents who have been opposed to him in small ways. Even people like Bill Cassidy, the longtime senator from Louisiana, Tom Massey, the member of Congress from Kentucky, people who have been opposed to the president, elements of his agenda. He's managed to defeat all these people. So the president continues to be the primary force in Republican politics. How that will play itself out as we move toward the general election in November? That's a big question because the president's also dealing with an approval rating that's not nearly as high as it was when he took office back 18 months ago or so. So I think that it's going to be a challenge for Republicans. I personally think that Republicans are going to have a very difficult time holding on to the House. I do think they'll retain control of the U.S. Senate in November. But it is going to be a very challenging campaign for House Republican members in particular over these next several months.
What is top of mind for the American public right now? Is it just the cost of living crisis, or are we seeing also any interest on the rivalries with China, on diplomacy, on anything that's going on in the Middle East as well?
Well, it's interesting. I mean, we're in a period of relative quiet in terms of the U.S.-China relationship. We did have an announcement regarding some additions to the entity list, the 1260H list a few days ago. But putting that aside, overall, it's been a period of relative tranquility. Public interest in the U.S. ahead of elections is always focused on economic issues. It has been for as long as I've been a part or involved in American politics. The pocketbook issues, how people are feeling about their personal economies, that continues to be the most significant issue for Americans as they look toward who they want to support in an election. So if we're thinking about the barometer of how Republicans are going to do in November, we need to look no farther than what is the state of the U.S. economy, how do people feel about cost of living issues, and I will tell you right now, particularly around energy, there are deep, deep concerns about how that cost of energy is impacting the political fortunes of Republicans.
I wanted to go back to something you mentioned. Obviously, you're in region, you're speaking with partners and policymakers and governments. What's the feeling? Because, yes, the energy crisis has roiled so many economies. It's also the U.S. distraction in the Middle East has frayed alliances in this part of the world as well. What are you hearing and seeing?
Yeah, it's a great question. I'm hearing a lot of feedback from, I've been all over the region the last couple of days. Many of the friends and partners and allies of America are wondering and questioning how America views those strategic relationships, these relationships that have been so important to building the post-war order for the last several decades. And I think the answer is in America, there still is a value and appreciation for those strategic alliances, whether it's with places like here in Australia or in Japan, two of the most important linchpins of the region. But I think that the level of awareness, the level of intensity of the importance of those alliances is not as high as it was, let's say, 10 or 15 years ago. I think American public awareness has broadly turned internally. People are thinking about what's happening in America. They're thinking about what's happening within the country. And they're thinking a lot less about what's happening outside their borders. Even though we have the conflict in Iran, the ongoing conflict in Ukraine, all of the geopolitical issues with China, the American people are an inward-looking people right now. And I think that defines some of the issues and some of the potential fraying we see around some of these really important geopolitical and geostrategic relationships.
So great to have you here in Sydney, Lanhee. Lanhee Chen, who's the fellow at Stanford University's Hoover Institution and a partner at Brunswick Group. More ahead here on the Asia Trade. This is Bloomberg.
The SpaceX IPO is bringing excitement to corners of the world where investors have long been starved of marquee deals. Enthusiasm in Japan is so fervent that the company recently raised its local fundraising target. For more, let's bring in Japan Equity Capital Markets reporter Yasutaka Tamura. Yasu, when was the last time that people were so excited? Was it SoftBank? How big of a deal is it in this country?
Okay, in terms of the offering size, that would be the biggest since JX Advanced Metals that went public in last year. So there's only one JX IPO in Japan with sort of about $2 billion of size, and since then we don't have. Of course, we had SBI Shinsei IPO, that was sort of a sizable deal in Japan, but we didn't have, sort of larger IPO in Japan.
What is so appealing about SpaceX for Japanese people?
When we talk to people, they said, so there's a lot of fans in Japan that, people love Elon Musk, people love sort of AI growing company. And we didn't have much sort of big growing company in Japan that did IPO. So it's a great opportunity for retail investors here to buy, such large-scale company and with sort of AI exposure, and also they did space business, right?
All right.
And one of the retail investors told us that and he planned to buy the IPO because he sort of respects Elon Musk and he likes the space business. So I'm not sure. So retail investors need to do sort of lottery stuff in Japan to buy the SpaceX shares. So I'm not sure if he'll manage to get
it. But the fact is that the local fundraising target has been raised by a quarter to $2.5 billion. And the excitement is not just in Japan, right? In other countries across Asia as well.
Right. So Japan is unique because retail investors have direct access to the IPO through sort of online brokers. But when we look at Korea, they sort of discuss how to get SpaceX exposure. So some of the idea is that they buy sort of space-related ETF that will have to buy SpaceX shares when the company listed. So they try to sort of get exposure in any way. So there's a lot of discussions in South Korea. And also when we look at in Australia, people are sort of asking if they can get, slice of SpaceX IPO, and there's a lot of excitement in Asian markets.
Yasutaka Tamura, our Japan equity capital markets reporter, with all of that excitement around SpaceX, Haidi, here across Asia as well. And of course, what could potentially become a $1.8 trillion valuation company, right?
Yeah, there's other corporate headlines that we're following as well, not just SpaceX. So let's get you caught up with some of those. We'll be back to SpaceX in no time. But Oracle shares, we're looking at those. They fell in extended trading after fourth quarter capital expenses came in higher than estimated, overshadowing AI growth. Oracle has refashioned itself as a provider of AI computing power, embarking on a massive build-out of data centers for OpenAI and other customers. It plans to raise up to $40 billion in equity and debt by fiscal 2027 to fund further expansion. KKR says markets may be underestimating AI's power demands. The firm's head of real assets says there are signs of frothiness in digital infrastructure, warning that too much may be built relative to current demand. KKR says it's not taking a view on AI growth, but is instead focused on positioning for the opportunity.
Look, we know from the telecom issues in 2001, these things do get overbuilt. And so there will probably be some overbuilding, and we also don't know which large language model is going to win. So to me, this is know thy customer, make sure you have contracted revenues, and don't do the if they'll build it, will come. I think you're going to see some of that. That's not what we're trying to do as a firm. Particularly, we have a leading infrastructure franchise. We do a lot in AI and the data center build out, but we're trying to be disciplined around that.
Japanese electronics components maker TDK is set to spend up to $400 million to acquire U.S. startup Fabric8 Labs, which has developed technology that can enhance data center cooling systems. The deal is part of the Japanese company's broader push into AI-related hardware. Joining us now exclusively is the CEO of TDK USA, Jim Tran. Jim, good to have you with us. How does this actually fit into the broader TDK strategy?
Thanks for having me on, Shery. So TDK, we deal with a lot of material science and process technologies. And by bringing the eCam technology from Fabric8 Labs into our house, we can combine that with our technology and create, help them scale to bring this type of manufacturing to allow these cold plates that we will be generating to reduce the temperature that's being, the bottleneck of the AI data centers today. And we believe we can reduce the power consumption as a result of bringing this technology into the data centers.
Why buy it in the United States? Why does that make sense? Is it part of a broader expansion strategy there?
Yeah, that's a very good question. You may have seen previously, TDK is one of the pledged companies previously with President Trump heading over to see Takeichi-san, the prime minister there. We pledged as part of that, $30 billion over the next decade to invest in the United States. So this is just the beginning of that.
And the U.S., though, is not necessarily a big part of your revenue, right? Around 6% or so. It's mostly geared towards China. Are there efforts for diversifying your revenue source?
Yes, that is one of the reasons why we're doing this. Also, the U.S. is still the home of innovation, and this 3D printing technology that we're acquiring is part of that, strategy of looking for a specific technology that will enhance TDK's portfolio.
What are the targets when we're talking about the percentage or ratio of revenue? What are the goals set in place, especially with this new acquisition?
We don't have anything stated publicly yet. We're still need to close the deal. We signed the deal, and we're going through all the process and the paperwork in the U.S. to close. So we'll be announcing that afterwards.
Jin Tran, CEO of TDK USA, really good to have you with us with that latest acquisition in the United States. And of course, we're setting up for the markets trading across Asia, and we're watching South Korea very closely. We had seen another down day in the previous session. Of course, it's been a roller coaster ride for the South Korea market. Kospi volatility so extreme that in the past 10 sessions, it equated to roughly 84% of annualized volatility. And what that means is that the benchmark could be expected to rise or fall by roughly that amount over the course of a year. You can see big moves in Samsung and SK Hynix today. This is Bloomberg. Take a look on how assets are setting up for the market opens across Japan. We had a down day for the Nikkei in the previous session, and you can see futures pointing to more downside of 2%. The Japanese yen still stuck at that 160 level. In fact, the Bank of America saying that if the BOJ delivers a dovish hike, yen selling could actually accelerate and potentially force intervention in the 161 to 164 range. In fact, when it comes to that policy decision, BOJ Governor Ueda is expected to miss it next week. He's in hospital right now. The BOJ has confirmed that Governor Ueda is being treated for a liver cyst infection, and treatment could be lasting about 2 weeks. Let's bring in senior editor Brian Fowler. And Brian, of course, we're all wishing him a fast recovery, but at the same time, it's such a critical time for the BOJ decision. Are there going to be any meaningful implications for the monetary path itself?
Yeah, we definitely wish him the best. And I think the fact that the BOJ says he's only going to be in the hospital for 2 weeks indicates that they're trying to tell us he's probably going to be okay. But in terms of monetary policy and the decision on Tuesday next week, we don't expect a change. It will affect the vote since he's not going to vote, so we'll only have eight votes. But we've had, in addition to the hawks, Tamura, and we know that others have also said of late that they signaled their favor, their support for a rate hike in coming months. So we would expect the vote to be maybe not unanimous. Maybe Asada will refrain from supporting it, but probably something like a 7-1 vote.
It'll be Deputy Governor Uchida, not Ueda, of course, facing reporters after the meeting. Does the change in the individual, the messenger, matter at all? Can markets find a reason to read anything new into that?
Yeah, Heidi, that's a good question. So first of all, Uchida himself, we haven't really heard from him of late. He was hospitalized from November until late last month for treatment related to leukemia. So he's just come out of the hospital. So that's something to watch. But he's very much the right-hand man of Ueda. He's on the same page. He's also very, very heavily involved in policy setting. So I would expect him to give a pretty clear message. Just to remind you, in the past, we've actually had some of Ueda's press conferences lead to yen selling because he gave such a balanced assessment of what was going on and would try to explain why the BOJ had held policy settings steady in a very academic way that seemed to send a dovish signal. So I think maybe it's possible that Uchida himself will be a little bit more clear and not convey something dovish. I think we're looking for a statement that says not only a hike, but looking ahead toward further potential hikes later in the year.
Governor Ueda expected back in July for that meeting. What are the broader questions when it comes to BOJ continuity for the rate path and even his tenure itself?
Yeah, well, I mean, so first of all, the Iran situation just does not seem to be settling down at all. So that's going to be something they're going to have to flick at. They're going to have to talk about the possibility of that weighing on growth, and that could complicate the process. But Ueda has been very clear recently in saying that he's more worried about the impact on inflation right now than he is about the impact on growth. He said that anecdotal evidence suggests that Japanese companies also are, when they think about their investment plans, what they're most worried about is inflation, more so than a slowdown in economic growth. So I think the trajectory remains upward even after the hike next week that we expect. And the question is the timing. The economists we've spoken to would expect the BOJ to wait a few months to assess the impact of the latest move, but maybe a move in October would be something to look for.
Bloomberg senior editor Brian Fowler there, as uncertainty continues to swell when it comes to the Bank of Japan and policy setting there. The yen, of course, pretty happily above that 160 level. But take a look at how we're setting us as we get into the start of equity sessions getting underway in the next under 5 minutes' time. The US military launching these strikes against multiple targets in Iran for a second day in a row is really what's at play here, as we have the worsening tech sell-off angst as well. That sort of pressure coming from retail rushes to take part in the SpaceX IPO is something else that's at play here. We're seeing New York traded crude holding on to still most of those gains on account of President Trump accusing Iran of dragging out talks on the interim peace deal. And we've had also various commentary around the closure of the Strait of Hormuz from the Iranian side, being contested, I should add, by the US as well. Nikkei and Kospi futures pointed firmly to the downside. Those market opens in Sydney, Seoul and Tokyo are in the next few minutes. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens with a fresh round of attacks from the U.S. military to Iran, Haidi, and of course, really the tensions rising on that front, as we also saw a fresh round of sell-off across tech in the U.S. session.
We heard from President Trump putting the blame on Iran when it comes to accusing them of dragging these ceasefire talks out. You said it earlier in the last hour, this is a ceasefire in name only at this point. Whether we can get back to a point where the two sides are negotiating. President Trump speaking to media just earlier saying that the Iranian side wants the strikes to stop, but we haven't seen a lot of progress so far.
Yeah, we'll be watching anything energy related in the Asian session today. Of course, we have oil prices gaining a little bit of ground today, given the renewed tensions around that ceasefire that is, again, at this point in name only. But take a look at how the Nikkei is opening downside of about 1%. And this, of course, following losses already in the previous session. The Japanese yen still stuck at that 160 level. We have heard from Bank of America saying that if we do actually get a dovish hike, or what's perceived as a dovish rate hike next week from the BOJ, we could actually see more yen selling and perhaps authorities intervening in the markets around that 161 to 164 level. We might get a very unique meeting next week, given that Bank of Japan Governor Ueda has been hospitalized. His Deputy Uchida will be actually carrying out the press conference, so we'll be watching for any rhetoric and tone in that presser as well. JGB's looking like this for the 10-year, 270. Of course, we had a very weak demand for the latest 30-year auction, so we're watching the pressure on the bond space as well. Take a look at how South Korea is open opening right now. We're just getting the export numbers for the first 10 days of this month, rising 85.9% year on year. Imports also rising around 35% year on year. But it's really all to do with the semiconductor export story in South Korea, because chips exports rising by 200% in the first 10 days of June. The Kospi opening to the downside of more than 3%, and we continue to see the weakness in the Korean won. In fact, authorities in South Korea stepping into the markets in about 14 years by opening an investigation when it comes to speculative FX trading. So we'll be watching for any more moves coming from authorities in South Korea. And we're seeing, of course, the chip makers under pressure given the sell-off that we saw on Wall Street as well, Heidi.
Yeah, take a look at what we're setting up for as we see Brent surging, coming online, and we are already seeing that gain, really mirroring the gains that we've seen in WTI as well. Brent crude, they're reacting to this ongoing geopolitical uncertainty. The US launching fresh strikes for a second day on Iran. We have this back and forth too when it comes to what's going on with the Strait of Hormuz. We had heard from Iranian media, Press TV, reporting Iran saying that no vessels, including commercial vessels, were passing through. The US now contending that to be untrue. So we're still continuing to wait for further developments there, and all this at a time where energy prices continue to be pushed higher by this ongoing disruption to Middle East shipments there. And these concerns over slowing economic growth, inflation as well. If you take a look at, of course, the US inflation numbers that we had picking up to that 3-year high, the erosion of spending power, and the question of whether it makes sense to pare back to that core number given the impact and the influence that we see of high energy prices on American households is one to watch as well. Treasuries that caught between that uncertainty with what was going on with the war and what's going on with those inflation numbers and Fed expectations as well. We're also looking at gold falling for that third day amidst the escalation of tensions in the Middle East. Sydney shares coming online. We're seeing downside of close to 1% in just the first few minutes of trading. Let's bring in now for some analysis Hebe Chen, who's a senior market analyst at Vantage Markets. Hebe, great to have you with us. So you've got tech and AI-related markets continuing to try and work out what the right pricing is, despite the exuberance over the SpaceX IPO. And you've got everyone else now concerned again in the Middle East. So how are you sort of positioning at this point, given myriad risks have re-emerged, including, I should also mention, the risk of a more hawkish Fed?
Well, yes, we do have a lot of things now happening. I think, as you mentioned, we do have a multiple layer of risk. I think we're starting from that, you talking about the tech stocks, and we're seeing that a quite substantial sell-off last night. I think that's kind of that the geopolitical tension is just putting the salt on the open wound. And I think that will definitely making the concern about the valuations even further if you bring in the Fed's factor in consideration. And plus that, I think you mentioned about SpaceX. I think that's probably one of the key stress tests for me, because at this point of time, what the market really cautious about is about liquidity. And with such a jumbo size of the new company, new listings, they were likely to absorb more liquidity from not just from other stocks, but other sectors. I think that will probably even making the things even much more trickier and risky ahead.
So where to for the AI trade then? Because it's not just SpaceX, of course, right? We've got a pretty full docket of big AI and tech-related IPOs, mega IPOs, going into the end of the year.
Well, yes, exactly. I think that what the SpaceX or the upcoming OpenAI isn't just about one or two companies listing. I think it's probably more about as I said, it's a stress test for number one, whether or not they will just serve as a sponge, which I mentioned, they will absorb a lot of liquidity from the other assets. Or for the positive case, which point more of the investors that looking forward to is that it will be serve as a key to unlock the next phase of the AI news cycle. But I think for the rest of the other, as you said, the existing AI players like NVIDIA's or even like Max 7, I think the key question is whether or not this listing will only attract more attention into this sector, or they will become a threat to test whether or not they could be the last survivors, given the market is getting so crowded, given that we have so many seems like A+ players to attract the investors' money. So I think that the next phase will be quite interesting. It won't be just all positive, like it could be a history making, but it also be quite a stress test for the stocks, but also for everything else in your portfolio.
What's been really interesting is that although we have seen foreign outflows from the South Korea market, of course, very, very hot on this AI trade, we have actually seen inflows into the Japanese market, perhaps perceived as more diversified. How big of a catalyst, though, will be the Bank of Japan's policy decision next week when we're expecting at this point a rate hike?
Well, yes, I think that the reason there's actually two parts I'm looking at for the Bank of Japan's upcoming meeting. If that you're asking a question whether or not they will hike, I think that is quite likely because now have two boxes been taken. Number one is the inflation. The Bank of Japan expecting the inflation will move higher in their last meetings. And second one is the urgency box also been ticked because the yen is getting to such a low level. But if you're saying that whether or not the hike will solve the Japanese yen's problems, like permanently, I would say it's probably unlikely. I think it will be supporting the yen temporarily, but we know there's one fact here is the runway for the Bank of Japan to keep hiking is actually quite short. They're actually cutting the GDP growth rate moving forward to only 0.5% for the year to come. So which means that definitely the Japanese economy in the Bank of Japan's eyes cannot survive for a higher rate. So more likely cases, probably a dovish hike is one of the cases. Another hike is the market were taking as just once and done. And that will even putting more damage to the yen's outlook.
Yeah, how risky is the situation right now, given that this could be also a very unusual meeting with the governor hospitalized? We have one of his deputies chairing the meeting, another one of his deputies actually carrying out the press conference, which of course necessitates very careful messaging.
Well, yes, exactly right. I think that's key. That's quite a key word, and it seems to echo what has happened back into, if you remember, August 2024. So I think this time the Bank of Japan have to be very careful about how they're going to deliver message. If they're trying to hike, if they're just putting on the questions eyes squarely on the inflation, they probably were making the market a bit ease about that they're still following the mandate layer. But if they're bringing more like the other outlook messages saying that, oh, because the economy is probably not doing that right, will be even more cautious about the path ahead. I think that we're definitely putting a message to the market that, okay, now the Bank of Japan is going to be extra cautious. And we have to remember the one thing is that the market always taking a bit of the confidence deficit into the Bank of Japan's normalizations path. The market always have now taking a view that they're always taking much longer for the Bank of Japan to making the next decisions. So this patience, this running out of patience will be another thing that will putting the pressures on the yen.
Hebe Chen, always great to get your insights. Senior market analyst at Vantage Markets, of course, as we continue to watch South Korean tech stocks in today's Asia session. Given the rotation out of tech that we saw in the Wall Street session, we continue to see the downside in South Korea. Even a lot of the robotics plays like Hyundai Motor, for example, getting hammered down more than 5.5% at the moment. This coming at a time when Kospi volatility is so extreme that swings over the past 10 sessions have been roughly around 84% annualized volatility. And what that means is that, at least statistically speaking, you could see the index rise or fall by roughly that amount. So we'll continue to watch the gyrations in one of the hottest AI markets right now. This is Bloomberg.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Take a look at oil as we continue to see that market reaction to the latest wave of hostilities between the US and Iran. We're hearing that second day of fresh tracks from the US to Iran, really threatening what was already a great deal of fragility in that temporary ceasefire. Oil jumping, New York traded crude pretty close to the gains that we've seen for most of the session, reacting to that news, and Brent crude coming online stronger by almost 2.5% at this point. The US military launching strikes on multiple targets. President Trump accusing Iran of dragging out these talks on the interim peace deal. US futures are also sitting lower. Let's get to Jill Deeses, who's Bloomberg managing editor. And so, Jill, we really have seen things ramp up again over the past couple of days after what has felt like really weeks of not much in the way of developments.
Yes, that's right, Heidi. I think at this point, it's really difficult to say that that ceasefire that was announced back in April is even still really in effect. You've seen maybe not the extensive U.S.-Israel bombing campaign that you saw at the beginning of the war, but what you have seen over the past couple of days, in particular, these strikes back and forth between the U.S. and Iran. So this latest round, this is what the U.S. is calling self-defense strikes happening on the Tuesday, sort of into on Wednesday, sort of into today, Thursday. What you are seeing here, I think, it suggests that there's this growing impatience on the behalf of Trump that there still hasn't been a peace deal reached. Remember, he's been sort of oscillating between this idea of a peace deal between the U.S. and Iran is coming imminently, within days, within weeks, to this more aggressive posturing, talking about how they'll continue to bomb Iran if they need to. It's been a really difficult balancing act for the U.S. to kind of measure here. We just saw yesterday that in response to what they were describing as an attack on a U.S. Army helicopter, that's why they launched some retaliatory strikes. But obviously, seeing some of this action today, you get the sense that those relationships continue to be strained, and it's really unclear whether or not we're going to see sort of ongoing peace negotiations that do actually result in any kind of a lasting deal.
And Jill, President Trump also claiming that the U.S. actually controls the Strait of Hormuz. What's the situation there?
Yes, Shery. I mean, I think you're seeing a lot of uncertainty over the status of ships kind of going in and out of the Strait of Hormuz. I think, certainly contributing to that bump up in oil that you saw it open just a few minutes ago. So you've got really conflicting circumstances here, or at least conflicting statements here. You've got Trump saying that the U.S. controls the Strait of Hormuz, that they have been able to sort of negotiate and work through ship traffic sort of coming in and out. You have, Iran kind of saying the opposite. So you do have, again, just a lot of questions over how exactly ships are, able to get it in and out of the straits. And with this ongoing, bombing campaign, with sort of these continued threats of additional military strikes happening around the region, that does sort of raise the question about, how exactly you continue to see that energy supply impacted because of this ongoing war. Because, I mean, remember, this is something that back when the U.S. and Israel launched this campaign in February, Trump was saying that it would be resolved within a matter of weeks. We're now at months without any sort of a clear understanding of when exactly a true lasting truce may be reached.
Bloomberg managing editor Jill Deeses is there joining us from Hong Kong on the latest on the renewed tensions around Iran. And we're seeing defense stocks under pressure despite some gains earlier in the week. Of course, it's a broad down day for South Korea names right now. Every sector in the red, being led by industrials. It's been an issue for South Korea, these huge foreign outflows. It's continuing to sort of struggle with this feedback loop where you have foreign selling, weaker won, then tighter financial conditions, and eventually also applying more pressure to the equity space, Heidi. So we are seeing more rhetoric, more action coming from Korean authorities to try to monitor the FX situation.
Yeah, take a look at what we're watching, Shery, when it comes to European futures coming online at this point. Downside for the Euro Stoxx 50 futures there. German DAX futures also softer by just about 1%, with not much movement when it comes to the euro dollar either. We continue to see that pressure when it comes to the tech and AI sector as well. It was a pretty muted session for European equities in the previous day. That key report on US inflation offering a little bit of relief in some sectors for investors. Also, although we have been sort of passing through the the nuance of that as to whether or not that impact of energy prices should be taken. We should be taking a closer look at that. Attention now, of course, turns though to the ECB's policy decision there, and we're seeing a little bit of trading along the sidelines going into that. The ECB looking to deliver that first rate hike, of course, since September 2023 when it meets on Thursday. More ahead here in the Asia trade. This is Bloomberg.
The new Fed chair, what they'll try to do is do no harm in June, right? Which is, this is probably not the time to make a massive pivot one way or the other. But my gut is that, I thought Larry Logan and others were right when they moved to a more neutral posture. We have 150 to 200 companies around the world. We have a great headlight system on what you're seeing, and prices paid are going up around the world.
KKR's Henry McVeigh speaking on Bloomberg surveillance after U.S. inflation picked up in May to a 3-year high. And we're talking about the headline numbers, more than half of it coming from energy prices. Still, when it came to core CPI, it missed to the downside. So CPI was soft enough to sort of avoid panic in the markets, but not soft enough to remove that Fed rate hike risk. So we had the Treasury space pretty mixed, the 10-year yield holding at that 456 level, the dollar pretty stable, not really doing much. U.S. futures also not doing much. In the overnight session, though, we did have chip makers continuing to sell off. We continue to see the consolidation in the tech sector after it really rallied to the best year since, 1999. There's a lot of exuberance in the tech sector, a lot of it, of course, coming from that SpaceX IPO as well. Bloomberg's being told that the company has attracted demand for more than 4 times the available shares. Banks were expected to stop taking orders after the U.S. market closed as investors worldwide brace for the biggest public debut ever. Let's get the latest with our deals editor, Michael Hythe. And even here in Japan, we actually saw the funding target being raised by a quarter or so to $2.5 billion, given the enthusiasm. Tell us a little bit about how we're going into this IPO.
Yes, the enthusiasm is there. There are a lot of buyers in Japan. I think the only country in Asia where you can buy shares directly. You can also buy them elsewhere in Australia nearby. But there's demand. That's the retail portion, which is 30%. The institutional investors have chimed in. We've reported earlier today that the Public Investment Fund in Saudi Arabia, the Qatari funds, et cetera, are also buying 1 to 5 billion share blocks are put in to buy them. The process now is that the order books have closed. It goes on to essentially the allocation of shares tomorrow and the official pricing of the IPO. Because it's that set price at $135 a share, a lot of the drama that normally goes with this stage is removed. There's none of this, will it price at the bottom of the range or the top of the range? It's going to be $135, it appears. And will be the announcement tomorrow, presumably. And then the shares start trading on Friday, and then we're going to see what happens.
Yeah, I mean, given all of this interest, we have seen SpaceX using its market power, perhaps against Wall Street as well, some of those junior IPO banks?
Oh, absolutely. There are 23 banks on the IPO, only 5 on the top line. And what's happened is, especially for the retail portion, some of those co-managers, as they're called, are the ones selling the shares to the retail investors, the individuals, instead of the large funds. And for example, in Japan, Mizuho is handling that. In Europe, SocGen is handling part of that. And we reported earlier today that because of what SpaceX is doing, it's already put pressure on its big banks and the biggest underwriters to accept what is a lower than usual fee. And on those co-managers, they feel like they're doing a lot more of the work because it takes a lot more work to sell to how many million retail investors than to a few big institutions. And they're putting in a lot of effort. They're getting paid proportionally less. And also, they don't get the bragging rights to go with it because they're co-managers.
Bloomberg Deals editor Michael Hythe there. Well, as AI spending accelerates, Baidu CFO says balancing capital allocation with shareholder returns is an impossible triangle. Henry He spoke to us at the Bloomberg Invest Hong Kong event about which aspect of the company's AI operations he sees as a must-win.
Cloud at this moment is a platform. You can not only hosting Ernie, which is our own model, but also I can work very open to hosting other models. And my chip, which connecting to my cloud platform, can also help on the inference. Because right now, the pre-training is important, but 80% of the incremental demand today on a token are inference related. I think this part of the full picture is what I want to emphasize, but given a tough question, if I want to pick one as a student, A, B, C, D, I want to pick number C, which is my cloud.
How are you actually allocating capital? And then how are you actually, I guess, balancing that with returning capital at the same time to shareholders?
Yeah. So I called it impossible triangle. So I kind of scratch my head every few months, every few weeks, depends on, I also see the headline numbers on Bloomberg News with other peers as well. So sometimes I make a little bit kind of hesitating to make a statement, but I just want to tell the facts and tell the views. I want to separate them out. Sure. So in the recent quarter earnings, we mentioned we actually solved partially on this impossible triangles. One is our operating profit increase almost doubled on the Q-on-Q base. And number two, our cloud revenue grew about 79% on a YOY basis, which is almost double of the YOY growth rate for the cloud market in China. And number three is, since Q3 last year, our operating cash flow has turned positive. So positive operating cash flow, incremental operating profits, and higher growth than the market. However, my CapEx is not seeing kind of double, even third, multiple times. So I think the way of resolving that is, as a CFO or as a management team of a heavy CapEx invested AI tech company right now, need to find a way, on one hand, really drive the growth, but also keep the density of the investment into AI in a reasonable pacing.
Baidu CFO Henry He speaking with Bloomberg Odd Lots hosts Joe Eisenthal and Tracy Alloway in Hong Kong. And these are some of the other top corporate stories that we're tracking. Oracle shares fell in extended trading after fourth quarter capital expenses came in higher than estimated, overshadowing AI growth. Oracle has refashioned itself as a provider of AI computing power, embarking on a massive build-out of data centers for OpenAI and other customers. It plans to raise up to $40 billion in equity and debt by fiscal 2027 to fund further expansion. OpenAI says China-linked accounts used ChatGPT to stir opposition to U.S. data centers. It says the accounts generated English-language posts raising concerns about rising electricity costs and were probably tied to a private Chinese tech firm that they didn't name. OpenAI says the postings did not have a wide reach. This is Bloomberg.
Let's take a look at how we're faring in the Asia trade. We're just about 30 minutes into the start of trading across major markets that are online for this Thursday session that is really being dominated by these renewed concerns over hostilities in the Middle East. We've got a second day of fresh strikes from the US to Iran. Lots of rhetoric being exchanged to Iran saying that no vessels, including commercial vessels, are being passed through the Strait of Hormuz. The US is contending that that's an incorrect statement. We're also hearing from President Trump speaking to Fox News saying that the Iranian side has reached out about stopping these strikes and wants that to happen. But all in, we're still at the situation where this fragile ceasefire, which hasn't really been much of a ceasefire for the last few days, continues to hang on by just a thread as President Trump, of course, continues to try and work towards this ceasefire, which has a lot of complicated, deeper issues as well, even if you get beyond some of the surface issues like the Hezbollah part of the truce and like the more complex issues when it comes to nuclear. But take a look at what we're seeing with Asian markets at the moment. A lot of declines when it comes to the Kospi and the Nikkei 225. We're also seeing that impact of that continued de-risking in the tech AI trade. Australia, we're off by 0.8%. But Shery, I should point out, Australia, some of these markets, including Japan as well, are actually seeing some big gains, close to 2% when it comes to energy-related stocks.
Yeah, we continue to see that rotation theme playing out in some of those more diversified markets. Let's bring back Markets reporter Anthony Stevens for a look at what's really moving today, because, of course, we continue to get that downside pressure from tech coming from the overnight session on Wall Street as well.
Yeah, so this continued pressure on the oil price higher is following through on the concerns of the CPI overnight. And that continues to set up this bifurcation in equity markets where people are selling their riskiest parts of the AI trade. The stuff that is not making money in the here and now cannot keep up with the pressure of higher inflation. So you're seeing that in Korea and Japan. To start, SoftBank is leading the way down. SoftBank has plummeted over 20% from the highs. So have the Korean robotic and physical AI names that are really plans in the future. LG Electronics, one of those names that Jensen Huang met. These names are down in the region of 20% from the highs. So you're seeing that happen on the riskier side of things. But as the session has kind of settled down this morning, you are seeing a little bit of buying in Hynix, for example, or Kioxia, names that have established cash flow. So it's going to be a very interesting session to see what people decide to dip their toes in and buy on the dip. And it looks like they've decided to play for the safe names.
What about the setup for China and Taiwan, Anthony?
Yeah, that's going to be a very interesting session. Taiwan, TSMC was down 4.5% overnight in the ADRs, despite a 30% bump in sales. And that's because the so-called whisper number in the Taiwanese market was for 35 to 40%. So you can see the hurdle rate for further gains in that market is quite high. Taiwan's been on an incredible streak of 5 days of selling. That's not many days, but each day has been over $2 billion worth of selling. So there's punchy pressure there from foreign investors calling time on that rally, just as local retail has ramped up their use of leverage. So local retail is looking very long in Taiwan and a bit vulnerable. Hong Kong, China is a bit different. They're a bit insulated from this US macro story, and HSI futures were actually up overnight. But that being said, the AI trade within China has been struggling. So Zhepu, Minimax, these kind of things are almost 30% high off the highs and are really struggling here as they look to list in the starboard. Meanwhile, the starboard itself has lost a little bit of buzz as the chip sector turns very volatile to see who can actually monetize these China stimulus plans in the AI sector. So a little bit more choppy session in China, I would say, than the rest of the region, with very differentiated winners and losers.
Our Bloomberg Markets reporter Anthony Stevens there with us. And let's talk a little bit more about that, because despite having lofty ambitions in AI, the tech stocks that we're talking about in China are struggling to keep up with the boom that we see in Taiwan, that we've seen in South Korea. The benchmark, mainland benchmark, I should say, CSI 300 index roughly flat for the year. The Hang Seng Tech Index is down 14%. Our Bloomberg opinion columnist Shuli Ren thinks Beijing needs to be looking closer at the makeup of these benchmark indexes. And Shuli joins us now, and he's saying when we take a look at the exuberance over SpaceX, maybe policymakers should be having similar conversations about index inclusion.
Absolutely. Index composition matters. In China, the CSI 300 index, semiconductor and tech hardware companies account for only 27% of the total index. And in Korea and Japan, what you're seeing is 80 to 60%. And in China, the rest of it is all, big banks, which are just not doing that well because the net interest margin in China is very, very low. And then consumer companies, consumer discretionary and staples. And we know Chinese consumers simply do not feel like spending. And China's economy has been deflationary for almost 5 years. So I think what the Chinese government needs to do is to talk to its state-owned index providers and consider fast-tracking more jazzy companies from the starboard, the Shanghai starboard that Anthony just talked about, and then move them into the CSI 300 faster.
Is a lack of jazzy companies the reason why we're seeing...
Sorry, what's the question again?
No, I am curious though. The difficulties when it comes to the broader economy have been well documented for China, right? You spoke about the consumer, the property market, etc. Is that why the performance has been so poor, and is it just the lack of sort of more exciting tech-related names at this point?
I think a lot of it, it is like that. If you look at the companies that are listed in China, right, the tech companies' earnings are not that bad, actually. Like the big memory chip makers, they're coming to market with a profitability. But if you look at everything else, like analysts, even onshore analysts, they have been downgrading their 2026 and 2027 earnings. And these companies over time, I mean, of course, if you just leave the index as it is, these companies over time, they're going to become smaller part of the index. But if China really wants to showcase a bullish market, that China is going somewhere with this AI trade, then they need to speed up the index composition.
That was Bloomberg opinion columnist Shuli Ren there with the latest on the Chinese markets. Let's actually get some more calls when it comes to the broader markets, especially on the bond side of things. Pimco warning that a credit loss cycle has begun as heavy AI spending could widen economic outcomes and hit lower quality borrowers. It expects significantly higher losses in lower quality credit, such as leveraged and private direct lending. Pimco advocates owning intermediate dated bonds as they appear well compensated. Morgan Stanley's chief U.S. equity strategist and CIO Mike Wilson sees stocks rising into year-end. Wilson believes current weakness in the market is a correction, not a change in trajectory. He told Bloomberg the recent market volatility is part of an ongoing rotation among cyclical and commodity sectors.
There's a deceleration, a second derivative, okay, which is what the market's picking up a little bit. That's a correction. That's not a change in the trajectory. So as we go forward into next year, that NTM, forward earnings, is going to continue to rise. And that's our call. That's why stocks continue to rise into year end. Multiples don't have to rise. It's just a forward, you move forward into 2027 as you look forward for 12 months.
Apollo Asset Management says private equity firms will have to start capitulating on valuations, warning that some firms will have to raise smaller funds or disappear altogether. But co-president Scott Kleinman told us it's still a pretty robust environment for making new investments in private companies.
As long as there's not an intervening recession, these companies are accreting in value, and you get closer and closer to your target valuations, even if multiples have come in. And so each year that passes, you will see
Does that make it
more
harder to exit, though? Because they get bigger, so your options of where you sell this company are more limited.
No, in the grand scheme of things, what it means is you're generating cash flow, you're paying down debt, you're creating more equity value, and you're approaching that target MOIC. Now, your hold period is extended, and so that's impacting IRRs, and so you are seeing IRRs come down in the industry for that 17 to 22 vintage. But no, with the passage of time, you'll see it. But yeah, folks are going to have to start capitulating for sure.
What does capitulation look like? Is it painful? Is it a reckoning?
Well, I think you will see, a shrinking of just the expansion of private equity firms that you saw over the last 10, 15 years. You'll see firms raise smaller funds. You'll see some firms go away. That's just the nature of the cycle. Yeah, for sure.
Apollo Asset Management co-president Scott Kleinman there speaking to Bloomberg's Danny Berger at the Super Return Conference in Berlin. Take a look at one of the rare sectors that we are seeing upside, and it's pretty significant upside actually. Here in Australia, we're seeing energy names trading higher by close to 2%, really bucking the rest of the downside that we're seeing in this session. This, of course, as we continue to see oil surging in the session with Brent coming online, they're over 2% higher there. These fresh US strikes on Iran threatening what has already been a great deal of fragility and uncertainty in this temporary ceasefire and truce situation. But this is the picture as we see some of these major energy-related names, oil names, Impex, for example, in Japan up by 2.5%. We're seeing Woodside Energy in Australia by 2.3% higher, and Santos they're putting on 2% there as well after a second day of US military strikes in Iran, with Iran also announcing a halt to all vessels through the Strait of Hormuz as the supply disruptions to global energy continues to worsen. More ahead on the Asia trade. This is Bloomberg.
Take a look at how we're trading in the Asian session. It's still pretty early, but we're seeing some downside, especially led by the Kospi, which is down almost 3% there. Of course, we've seen a lot of volatility for the Kospi this week. We had losses of more than 8% just on the Monday session, triggering the circuit breaker as we had that global tech sell-off. Kospi volatility, but still, despite the global volatility, Kospi has been especially extreme. The swings over the past 10 sessions equating to roughly 84% annualized volatility. That statistically means the index could be expected to rise or fall by roughly the same amount over the course of a year. Of course, we're also contending with downside pressure on the Korean won, which has slightly rebounded from a 2009 low, with authorities mounting that rhetoric of oversight in the FX space. Now, one company that we're also following today, smart ring maker Oura, filing confidentially last month for an IPO. And Bloomberg's been told it plans to make its stock market debut later this year, looking to cash in on the growing popularity of wearable tech. The Finnish company says it's aiming to top $1.5 billion in revenue this year. It's also just released a new, smaller ring offering health tracking features designed to detect early signs of conditions such as high blood pressure and sleep apnea. Joining us now from Singapore is Oura's health AI clinical lead, Tanvi Jayaraman. Tanvi, good to have you with us. I mean, there are so many companies these days with new health features, giants like Apple and Samsung, for example, coming out. So what makes the health benefits of Oura competitive against all of them?
Well, thanks so much for that question, and thanks for having me here. I'm an MD by training. I'm on our clinical team, and the focus of our team really is around trust and credibility. I focus on health AI, so I look at our AI products and our platform and make sure that the answers that we're sharing with consumers is really clinically rigorous. And I think that's one of the areas that I think Oura really differentiates. Another area is the form factor. You know, this ring is close to the palmar artery. The signal that we're able to get is extremely precise, and wearability of our ring is over 23 hours per day. We know that, you know, when your body is at rest, we're able to get that signal around how you're really doing. What are your biometrics really telling you? And I think wearability, a wearable that you're wearing for as long as you are, is a key differentiator here.
What about the use of artificial intelligence, and how are you expecting this not just to change the way the Oura does its business, but also perhaps a broader medical industry as well?
I think we see that members are going online for their health questions. We see this all over the world. And when you're, it's 2 a.m., you're a newly postpartum mom, you're going online because maybe you're having some sort of pain, you're not sure if this is normal. Your first step is looking online. And there's a lot of noise out there. There's a lot of answers that are really great, but there's a lot of information that's also clinically incorrect. And so there's a real responsibility for us as we build AI here at Oura in making sure that we can build a superior product that connects your unique biometric signal with clinically rigorous and valid research and insights so that you're getting a very unique answer just right for you. We see that in that newly postpartum mom, you know, is there an infection risk? Are we seeing elevated heart rate? Are we seeing elevated temperature? Does this mean you need to speak to your clinical team sooner? Or is this just a typical experience in that postpartum period as your body is adjusting? So helping our members make that distinction is a really critical piece of our AI work and a lot of what I'm focused on.
Tell me, how much buy-in has there been from the medical community in terms of bridging that gap, right? Because, of course, you can head online, you can ask AI, you can speak to a chatbot about perhaps some symptoms in the middle of the night, but that next point is you take the data that something like the Oura Ring has collected and you actually go and do something about it, right? Is there a partnership there or a way to bridge, the sort of time poor and energy poor situations that a lot of people are in when it comes to actually doing something about their health?
Yeah, and that's exactly the remit of our clinical team. We are a lot of MDs by training, and we are building lots of relationships with clinicians on the ground. one of the things that we hear is the way clinical medicine is practiced today, you have point-in-time vitals. So when your patient comes to see you, we might take a blood pressure, we might look at your heart rate, but that's really only giving you a snapshot of how your patient is doing. But there's so much rich data that you can get from wearables and the longitudinal trends of how a patient has been doing in between visits. And I think that's where wearables can be extremely powerful, is giving that continuous stream of information so that when you do go in to see your clinical team, they can see not just how you're doing today, but how your body has really been doing for the months beforehand. Hopefully that leads to more precise signal in that visit of what to do about your health concerns. And we also hope that that strips away a lot of the noise and the need finding during that clinical visit, where if you have 20 minutes, we really want to make sure it's the most effective and efficient 20 minutes possible.
One of the most fast-changing and I think interesting spaces for medical data at the moment is what we're seeing with GLP-1 medications and the effects, right, on health data sets. What are you guys seeing in terms of the data that you've seen so far?
Sure. Well, we have many different questions that our members ask us today. And we have features in metabolic health like meals, like integrations with continuous glucose monitors. And we just launched an experience for members that are on GLP-1s for them to better understand how that affects all of their other biometrics. We really want to meet that member need, and we want to build features that our members are really coming to us asking questions about. And this is an area that we are excited about and focused on.
Tanvi, really great to have you with us. Tanvi Jayaraman, there, Aura's Health AI Clinical Lead. More ahead here in the Asia Trade. This is Bloomberg. Take a look at one of the other sectors that we're watching. Given this increased escalation of Middle East hostilities, airlines are on the way down for multiple reasons. 2.5% lower when it comes to JAL, and Qantas is down by 2.5% there as well. This also, as we see energy prices continuing to cause pressure for a lot of these fuel-sensitive sectors. We're seeing oil to the upside of close to 3%. Depends on whether you're watching Brent or WTI in the course of the session, but those gains are being held as we continue to see these new strikes from the US on Iran as the ceasefire negotiations continue to fall apart. At the same time, we're also watching some of the de-risking pressures when it comes to AI and tech at the moment. And Lenovo says it will also need to raise additional capital to fuel growth as the US-China AI race intensifies. Speaking at Bloomberg Invest Hong Kong, CFO Winston Cheng told us that the current fundraising rush, led of course by SpaceX, is driven by real growth opportunities.
The IPOs that are coming, you see then Alphabet coming to the market ahead of these two to really get their share first. And of course, we see the SpaceX IPO this week as well. So I think from that perspective, I think overnight you also see Supermicro also raising. So I think there's a lot of capital demand for the space but that demand is underpinned by growth opportunities. So companies are not raising for the sake of raising. They're raising for clear use of proceeds and because there's clear business opportunities ahead of them. So I think if there are visible, clear, attractive business opportunities, we will probably need to fuel that growth with additional capital as well.
As the US-China AI race intensifies, can Lenovo stay above the fray, or at one point do you have to pick a side?
I think Lenovo is a global company in 180 markets. Our core technology, I think the key to everything right now is understanding the regulations that exist in all the markets, right? I think the non-regulations, not just in terms of chips and other things, but it's really, whether it's ESG related as well. I think that's also important. And that's why we built a factory and in partnership with PIF a lot in the Middle East, because to use the sustainable energy, right, in terms of doing this and really to have the hopes of supplying this and exporting out of the KSA in the future for ESG related matters as well. So I think from that perspective, really being compliant, being ahead particularly visionary, like a sustainability effort like this, I think it's important for us. Yeah.
And I don't want to take up your time for lunch, but are you not worried about the share price? Is it too hot right now? Or it's a down day today, but do you think this consolidation is rather healthy?
Well, I never really look at the day-to-day because I think 180% of I work probably 18, 19 hours a day, right? I think about it. And so 180% of my efforts are towards creating value to our business and to shareholders. So I think as long as we're doing that and working hard and efficient, I think there's only one direction to that. And clearly this time we're setting this in terms of post-earnings. Our options are set at this $20+ level, so we'll be working hard to create additional value.
Lenovo CFO Winston Cheng speaking to our colleague Sang-Mi Cha at Bloomberg Invest Hong Kong, and take a look at some of the big movers across Asia's session. Of course, we're watching the rotation out of tech, especially when it comes to SoftBank, very much exposed to the artificial intelligence trade, is now down more than 33% today from its recent high earlier this month around June 3rd. So that's a huge plunge for SoftBank, which is recouping a little bit of those losses in today's session. Even Kioxia recouping about 5% from losses of more than 7% in the previous session. Take a look at financials because it's broadly a down day. We are seeing that rotation out of tech, but also financial institutions under pressure, despite the fact that earlier in the week with BOJ rate hike expectations, we had a little bit of upside. But we are now seeing the Topix Banks Index down more than 1.5%. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.